Jesse, it's November.
It is. And so first of all, that's the month of awesomeness, gratitude, bird days in there.
Eating birds.
Eating birds. And it's also post-election, which is dope.
Yep.
Most importantly, though, is the number to watch the year after an election.
And what are we doing about rising interest rates after the Fed cuts? Yeah. Is there something that can be done there to take advantage of that?
November, let's go. So if you are part of our loyal listening tribe, all 4 of you out there, then you would have heard, we've been calling this, right? So like we've been looking at it from a leading indicator perspective, number-wise. It's finally now landing on the page as the laggings, right? And by the way, I'm not a big numbers lover dude in this regard anyway, because I feel like it's gobbledygoopy. So I like looking at it through the lens of like, compared to what? And then once you get that, like, then what does that then mean to me? So maybe the second part's a little more on a one-to-one individual thing.
Sure.
So let's just start with the compared to what. So first number, 48.7%. So what that means is that inventory is up basically 50% from this time last year.
Yeah.
That's not like a little chumpy changing.
No. Not as bad as certain pockets where we've
said.
seen 100, 200, 300% inventory climbs.
Well said, because we do those shows. Those are shows we do.
Those are the other shows that the other 5 people watch.
Yeah, exactly. But so price is flat, basically a small little uptick in price, like what, 3.8, I think, %, which is basically like the little train that just won't trip off the station.
Yeah.
But it's not like, right? So the demand aggregate has finally like met its match, and it's sort of stalemated, right? It's like sitting there staring at each other, right? With dull weapons in a lowly lit room.
Like we do before this.
Right now, actually.
Yeah.
And then the last one is 1 year change in closed sales, basically flat also.
Yeah.
Okay, so those are the only 3 numbers I wanted to really discuss, because what does that tell you, right? And if you go in here a little deeper, it'll even say like days on market going up. It'll say like list price to sales price, like offsetting. So it feels like we've finally met that moment where the Fed's monetary policy actually worked. It did what it was supposed to do. It pinched everybody's purse bags, right? Strings, mixed metaphor there. Stay with me, okay? So to the tune that they were like, all right, dude, we're good. And as soon as the we're good happened, that like chugging train of prices finally quelled, right? And inventory is what falls in behind it in its wake. And so now we're in a moment where it's like, okay, it's the end of the year. Election just happened, okay? The year after an election is usually really strong for real estate. And this makes sense.
Yeah.
Because people they go on like a self-anointed a moratorium, right? To see what gang gets into the White House, reds or blues. Then you have on top of that monetary policy. We just talked about that, right? So that's been throwing people over to the sidelines. And then you have your own people's strategery of saying, I didn't want to go do something when it was on its way down, kind of.
Right.
Wanted to wait for it to rebound. So that confluence and that triangulation of those 3 things is full on powder keg moment. So I feel like we have the rest of this month, and then we have December, and then maybe a little bit of January. So if you're looking to buy, take heed, because this is like the little eye of the tropical storm. And then I think 25 is going to take back off again.
Yeah, and I mean, speaking of pinched purse bags, rates.
Yeah.
Let's talk about it. I mean, the Fed cut rates, and then almost immediately they started increasing, right? So we're seeing some of this, I think, contribute to these numbers, right? Where not only do we have this certain cyclical part of the year, not only did we have the election, but also now we've got this rising cost problem. And so people have kind of hung back and self-selected a little bit. But this can actually yield an opportunity. If you're an investor, if you're someone who's willing to look for moments in time.
And by the way, we're all investors in San Diego County. Let's just be Let's be clear about that, right? The same way that everybody is in sales. I don't care if you're in management or you're like everybody's selling to somebody. We're all investors if we're playing the San Diego game, even if it's the place we call home.
Yeah, it's a good point. So when I use the phrase investors, I really mean someone who's looking to buy and see growth, right? Everybody's pretty much doing that.
Right.
And so in this particular example, you may be able to use these higher rates to your advantage. Let me give you an example. If demand is decreasing, we get some more supply,
Yep.
and there's lots of inventory on the market. What does that do for a buyer? Gets you a little bit more strut, right? So you can start picking the opportunities that are best for you. Rates are not a permanent function. And this is a lesson that we've learned over especially the last handful of years where there's been big cycles. So
rates are not a permanent function, meaning that you can change it over time.
yeah,
Right.
Meaning
Whereas
this isn't your forever rate, most likely.
Whereas if you buy the place, that's your forever price.
That's your price.
Right.
Right. And even I hear that played out a lot. More importantly, I'm trying to drill down into the idea when you have higher rates, people are backing off. I have buyers that just simply can't afford what they wanted to buy the last time. And so what we're seeing now is this little lull. And if you're someone who's looking to get in on some opportunities, make a little bit of money, make the sale a little easier for the seller because, hey, I know you got bids few and far between, or maybe they're super low. Let me come in and give you what you want, because if you're a buyer who can afford these extra little margins, that's an opportunity to then go in and have a negotiation. It's kind of a neat little strategy and a different way to flip this whole thought on its head of like, rates are higher, it's more expensive. Yeah. You can pout, or you can take advantage of these opportunities and really get in on something that maybe would be really aggressively pursued otherwise.
You have to be able to qualify. So there's a debt to income ratio threshold.
Right.
Assuming that that is the case and you can afford something reasonable now, either for you to live in or for you to invest in, then it's like a gamification.
Yep.
Right? Because no one wants to swallow a bigger rate / payment. And then you're like betting against this future event that may or may not happen.
Right.
Rates going down. You know, it's like, it's like discussed that everybody wants to always claim that rates are going to be better tomorrow than today to get you to make a decision today in their favor, right? So that's always kind of creepy.
Yep.
But the reality is that if you look in San Diego County and you go back historically, okay, forget all the fluff and puff and the temporal BS, okay? It's going to go up, and it hasn't really gone up in recent months. So it suggests that maybe it's poised for a little run up.
Yep.
Maybe not like post, 2020 run up style. Right. That was like wild, but like run back up again. If that's the case, then what's the cost of waiting?
Right. So so many times I've run these numbers for clients, but it's interesting when you look at a housing price climb 5%, 10%, and rates go down, you still end up paying more. You end up paying more for property taxes. You end up paying more over the life of the loan. It's just more. You need more of a down payment.
More of a down payment.
This whole like conversation of like trying to time it. Now, if you can somehow magically time a market drop with lower rates, do it.
Right.
And also call me and let me know when that's going to happen, because that'll be a tremendous opportunity.
Right.
The likelihood of being able to time that is hard. And so what you have to do is watch the rest of the market and make decisions based on the mid to longer future, because that's where real estate really makes a difference.
Yeah. Also, the Big Four came out last week, right?
Yep.
So Fannie Mae, Association of Realtors, Mortgage Brokers Association, there's another one in there, okay?
Yeah.
They all said, hey, aggregate of 25 is probably looking between like 5 3/4 and 5.5.
Yep.
Right? We're at like what, 6.5, 6 3/4 right now for reference.
Yeah.
That 1 point swing is easily 10 to what, 12% of someone's purchase power?
Yeah. Pretty big opportunity.
So what is that? So let's just say, let's say you're comparing today at 6 3/4 to sometime in the middle of 25 where it's 5 3/4. Like, what else other than just my payment's going to be lower because it's a 1% drop in my rate? What else will also be true that'll be filtering into that decision-making matrix?
If rates drop to that extent.
Yeah, exactly.
Yeah.
Like this moment in time where you can time machine.
Yeah. Yeah. And you work with sellers, right? So if you're a seller and rates have dropped, making your home more affordable, do you then have a lot of sellers approach you and say, hey, I'm really excited that buyers are going to be able to buy my house for cheaper now?
Right.
Or do they say, hey, my house is more affordable.
Yeah.
Let's get a little bit more money out of it, right?
And the beautiful part is, is that they don't even have to, because it's the meritocracy of the market that tells them that it's worth more.
Right. And you just simply look at these increases, and there's a real correlation between rates dropping and housing prices. That's why we've seen it over the last few years. So anytime that happens, more buyers in the market, more competition, money's cheaper, more affordable. That's it. Bottom line, prices go up every time. So How do you navigate that as a buyer or a seller? You have to pay attention to the reality of it rather than feeling as if you're in this uncontrollable rapids where you're just getting whipped about. Think critically about what your steps are, what your goals are. Get with your real estate agent, make a plan for either buying or selling in an opportunity where you have the most advantage, as opposed to doing it when everybody else is. When you finally get a news article feed that says rates are low, now you go do it. So is everybody else.
Right.
So I think the overarching theme to our conversation so far today has been, economic data is looking a little weird.
Yeah.
But
as it should be.
As it should be.
As it should be.
Because of all of the different components, right? Of the market and where we are. But there are opportunities in times that feel otherwise.
That's right.
And so that's a great time to plan, have a conversation with the professionals you trust, and figure out the next best steps for you.
What's the Buffett quote?
So he always says when everybody else is afraid or selling, that's when you buy. And I think that's really sage advice.
25, here we come. Happy holidays, y'all.